Hey YouTube, what's going on? It's Patrick here at VectorVest, and today I've got another video on 3 hot stocks, 2 that are mainstream, 1 that may not be on your radar, but after today, once you finish watching this video, you'll definitely want to add to it. So if you're ready to find out more about these stocks and see how they compare, make sure to hit that like button, subscribe, and let's jump right into it. Alright, welcome back. So now let's start off by looking at some of the headlines that leads into the stocks that we're going to be taking a look at today. The first 2 that are probably the bigger names that you're most likely familiar with are Tilray and also Aphria. Now, if you've been living under a rock and you're not familiar with them, they're 2 companies that have the potential to upset the industry and really set themselves as a leader in their industry. But there's one stock that I feel like is even better regardless of whether these 2 companies merge or once they merge and they become, as we can see here, the largest company in their industry based off of revenue, and we'll get to that in just a second. But these 2 stocks, one from the US markets, one from the Canadian markets, are in an industry that still has a lot of growth ahead of them. Regardless of what your thoughts are on that industry, you can't help but deny that this industry still has some of the most potential out of any industry trading in the US markets alone right now. So as we all know, Tilray and Aphria will merge and their stocks will start trading under the same ticker, APHA for Aphria, starting May 5th. Now let's go ahead and jump into the VectorVest analysis, take a look at the 2 stocks that we have here, and then also take a look at the mystery stock, the one that you're going to want to add to your radar right now. Alright, so I'm in the VectorVest stock viewer and I've got the 3 stocks right here for us. So as we can see, we have Aphria and Tilray, the 2 names most people are familiar with. And just taking a quick look at the analysis, right now they're both grossly overvalued. They have a low RV and RS score telling us they have poor fundamentals. And also their timing is below 1, telling us that they are in a steep decline right now. So therefore, of course, both these stocks are rated to sell currently in the VectorVest database. Now, the one stock I really want to point out that seems to get no love is Green Thumb Industries. If you're not familiar with it, go check out our videos that I've done previously on our channel. You can find out more insight into this company. But in my personal opinion, it's one of the best stocks in the industry because it has a solid balance sheet and is setting itself up for when legalization happens and when the United States starts to decriminalize things. This company has the groundwork already laid to be the dominant player in this field. So just to quickly recap, just like we did with the other 2, yes, Green Thumb is overvalued right now. Its value is currently at $12.59. Its price is trading at around $32, so clearly overvalued. But then we look at the RV or the long-term potential above 1, telling us it's good. RS above 1, telling us it has less risk associated with it compared to the average stock out there, which in this industry is something very rare to find. And then looking at the timing, 1.02, we have the short-term trend starting to change from down back to up. Also, as a side note, something we're not going to see here today, but just as a little side tip, Green Thumb also has earnings coming out on the 12th of May as well. So not too much longer, and they have their earnings coming out, which could really see this stock boost its price and help continue to climb. Because as our founder, Dr. DeLito, says, earnings is the engine that drives stock prices higher over time. And as you'll see in just a second, this company's got that strong engine that you want to have in your portfolio. So now that we've gone over the quick analysis, let's go ahead and jump into the graphs here. Alright, so starting off with Tilray. As we can see, Tilray has been relatively flat over the last year. It did have a big spike coming from about $10 a share all the way up to $70, but then quickly dropped right back down and getting back to close to break even where we were just even 6 months ago. So the long-term stance on this doesn't look great, but as we know, they're merging with Aphria, which we'll take a look at next. One thing I do want to point out here, however, is looking at the earnings have been steadily rising, which is a good sign. Looking at earnings here with VectorVest is something you're not going to be able to find anywhere else because our earnings don't just look at that number that comes out once a quarter. This is looking at not only the historical data, but also a forecasted 12 months down the road earnings per share as well. and coming up with a conglomerate of those two. So when you see this earnings per share, it doesn't just tell what they've done in the past, but also what they're expected to do going 12 months down the road. And as the old saying goes, money goes where money grows. So we see Tilray, but that's really not the main headline we want to look at. Aphria would be the next one because that's where it's going to be traded under. Tilray is coming into Aphria. Aphria is merging with it and going to be trading under APHA. So with Aphria, we see a nice steady run up. You had that big blast off of the news of the potential merger coming out. Stock then after that dropped hard, which out of this whole industry is pretty standard. We saw a pretty big drop in this industry over the last few months. And one of the reasons why I've been paying attention closely to this industry over the last few months is because of that oversold level that we've been seeing with it. A lot of these stocks had phenomenal runs throughout 2020, and then now coming into 2021 where people expected to see this industry really grow substantially this year, and then all of a sudden starting off a little rough with the speed bumps we've had pretty much, or the sell-offs or profit taking that we've had, sets this industry right for a nice explosive rally. Obviously, we want to see some signs of a potential breakout. We don't want to jump the gun too early, but that's why this is a great opportunity to get these stocks on your radar so that way when that breakout occurs, you can be first in line and jump on board early to capture that explosiveness that happens right after a breakout. So, but going back to Aphria's graph, we can see that big blast off of the rumor of the merger, stock pulled back, and then since that point, lower highs, lower lows, nothing looks too great so far from what we're seeing based off the chart. Also, looking at the earnings per share line, which if you recall is the engine that drives stock prices higher over time, look at that pattern, upper left to bottom right, telling us that earnings are not only falling, but expected to continue to fall 12 months down the road. Now, let's take a look at that sleeper, Green Thumb. So I'll go to the next one here. And now look at Green Thumb's graph. Nice price appreciation growth here from bottom left to upper right. And look at that earnings, bottom left to upper right. That tells us not only is this company making money, but they're expected to continue to make money 12 months down the road. With earnings coming up very, very soon, you've had this nice pullback, a healthy correction to a strong support level, and now starting to see a move higher, back above a previous resistance right around $32 a share. And with earnings coming up, that could be that explosive news that we're waiting for to see this stock break out to a new high and continue that nice uptrend that we've experienced with this stock for the last year. Now, once again, if you're not familiar with this stock, this is not the video where I'm going to get too much into who Green Thumb is. If you want to check out our other video, make sure to click on the link right up there. There we go, right up there. And you can find my recap of Green Thumb and breakdown of their companies that are under their umbrella and why I think that they are a sound choice for going into the future. So if you like this industry, if you like these stocks, let me know your thoughts about it in the comments below. Let me know what you think will happen after the merger. Also, if you ever want to get this type of analysis on any stock out there at any single time, you can go to the link in the description of today's video. You can enter your email in to get a free stock analysis report and they'll send it to you right away to your email. And that way you can get this kind of analysis on whatever stock you're interested in as well. So once again, appreciate you guys coming out here today. Hopefully you enjoyed today's content. Let me know your thoughts in the comments. I'd love to chat with you guys about this stock. Are you guys already familiar with Green Thumb? If you aren't, is this now on your radar based on what you see here today? And if it isn't, tell me why you think it's not a good stock to add on your radar currently. So with that, take care, adios, and I'll see you guys in the next one.